Hey guys, Tony here. Welcome back. In this video, we're going to talk AMC's Q4 earnings. Those earnings being officially expected around the first week of March. But we're going to do a little sneak peek based on my spreadsheet today and talk about where the top line revenues are expected to come in, the net income that I think that the company is going to see, and what that translates to earnings per share. Let's get right into the info. I want to start off by saying what I have said many times. Nobody pays me for my opinion. Nobody has ever paid me for any opinion on any stock in any manner whatsoever. Everything that you are hearing is my own due diligence, my own work, and my own opinions. You can take it or leave it. I'm just letting you know my DD so you can kind of get an insight into the things that I'm looking at as I develop my own trading strategy. The domestic box office for Q4, that is US and Canada, according to Box Office Mojo, came in at $1.855 billion. That is about a 4.5% increase over 2022. On an annual basis, that means that 2023 came in at $8.9 billion for domestic box office. That is all theaters in the United States and Canada. I know that some websites are quoting $9 billion. I've always just used Box Office Mojo, so that is what I'm going to stick with for this video. A quick look back at Q3 before we get into Q4 and the estimate model that I use. When we talked about Q3 using this spreadsheet, which I developed, taking the exact line items from AMC's income statement and certain inputs like the domestic box office, and then using formulas to extrapolate out what the earnings is going to look like. In Q3, we had here three different estimates depending on what percentage of the overall domestic box office was captured by AMC. There are other competitors in that $9 billion of domestic box office for 2023 that AMC has to share that box office revenue with. So we make some estimates of the percentage that AMC is going to get. And I had estimates between 27.8% all the way up to 30%. And it varies a little bit every quarter. It ended up coming in right over 30% for Q3. This is the actual right here. And with my spreadsheet using the best case scenario, I had forecast that they would come in with a net profit of $14.2 million. The actual that they came in with was 12.3. Now that we've looked back at Q3, let's talk about Q4. Q4 has its own peculiarities that is going to make it difficult to nail it exactly on earnings per share. And let's talk about those for a second. And I'm going to present you three different cases, just like we did in Q3, a worst case, a middle case, and a best case. The things that are going to make Q4 difficult would be, number one, AMC has issued more shares. So I have right now that potentially the outstanding shares could be as high as 259 million shares. I don't know that exactly. We haven't got an official communication from AMC, but that could sway this end result of earnings per share that we talk about in this video. So I might need to make an adjustment between now and March if they do update us with a share count. The other thing that happens in Q4 is the annual Goodwill impairment test, something that every company has to do at least once a year. And in that Goodwill impairment test, what they do is they take the fair value of reporting units and compare that to the carrying amount, including any goodwill. If the fair value is under the carrying amount, then they have to do a goodwill impairment. Although there are exceptions to this rule. If a company has a dramatic drop in market cap, that is one of the reasons that a company might need to do a goodwill impairment test. However, it does not necessarily mean that the goodwill will be written down just because the market cap fell. And it's my belief that the company is not just going to look at the market cap, but the future cash flows of those reporting units. And I suspect that there will be no goodwill write-down. If there is a goodwill impairment, it will change the numbers on here. So we'll talk about that at the end of the video. Moving into the Q4 forecast, we have three different scenarios here using $1.856 billion for the total domestic box office. The one thing that we don't know for sure until we get the results is of that total box office, what percentage went to AMC versus the competitors. It varies every quarter. So I have three different scenarios here between 28%, 29.5%, and on the high side, 31.6% For company revenues on the income side, we've got admissions income, we've got food and beverage income, and then we have other. Once we have that total revenue, then we need to remove the operating costs and expenses, and those include film exhibition costs, food and beverage cost, operating expense, which does not include depreciation and amortization, and we also must subtract the rent. In all three of these scenarios, I have AMC making a positive gross profit between $5.5 million and $98 million. However, gross profit is not the only thing that we're interested in. We want to know the net profit, if any. We have to remove additional expenses, and those typically include a bucket called Other and depreciation and amortization. Once we have those items removed, according to my model, no matter which scenario we use from worst to best, I'm expecting that we will see a net operating loss between $143 million to negative $51 million. We then also have to subtract the interest that the company is paying on its corporate debt. That'll be somewhere around $90 to $93 million, maybe a little bit less, since they have been paying off some debt, but I'm just going to go with $90 million on this line item right here, number 28. One thing that I want to bring up, this other income or expense item right here, I am going to be optimistically adding in, and I don't know if this will be correct, this is just my guess, guys, $50 million positive due to gain from extinguishment of debt. You know those debt for equity exchanges that the company was doing as we ended the month of December? I think that that might have been used to pump up the income side of the income statement. If they realize a gain from the extinguishment of that debt, it will go on this line item. And we did see that to the tune of, I think, $14 million or so in Q3 on another debt for equity exchange. At any rate, getting down to the net profit or loss, the number that we really care about, I have it worst case negative $196 million, best case negative $103 million. Now, if we assume that the share count is actually higher than what the brokers are showing because AMC has issued more shares and done those debt for equity exchanges, I don't know for a fact that it is this high, but I'm going to use that as my first example, and we'll talk about the share count that the brokers are showing right now in just a second. It gets us, using 259 million shares, a net loss per share ranging between negative 76 cents and, on the best case, negative 40 cents per share. What if the outstanding shares is more in line with what the brokers are currently showing, which is around 198 million? That would change only the net loss per share. It would be a little bit worse, negative 99 cents, up to a best case of negative 52 cents. All right, let's talk about the final unknown for Q4, the distribution deal for concerts that AMC had with Taylor Swift and Beyonce. You'll notice I didn't talk about that in the first part of looking at the numbers. It's a little bit fuzzy. There have been some wild numbers thrown out there, but according to one article, Taylor Swift and AMC were going to take 57% of the gross of that movie and split that between themselves, and then the theaters would get the remaining 43%. Taylor Swift brought in $179 million for the quarter domestically, and Beyonce just over $30 million. And if we just use that rough formula that as part of the distribution deal, Taylor Swift and AMC split 57% of the gross proceeds, and we factor in a little bit of fudge factor for Beyonce having a similar type deal, that gives AMC an additional $55 million or so for the quarter. Let's be conservative, and let's say what would happen if that distribution deal does bump up the top line revenues for AMC, and what if the share count is 259 million shares? Then we get a little bit more improvement for Q4. Worst case, negative 40 cents per share. Best case, negative 26 cents per share. I know that some of you want to know, what is the breakdown for popcorn being sold in retail outlets like Walmart? What about credit cards? I think that, since we've already had those in existence, at least in last quarter, and it didn't meaningfully change the numbers that I had in my spreadsheet and the outcomes being very close, I don't think that the income generated from those additional streams of income is a meaningful enough amount for me to make any adjustments for them this early. However, at some point, as those businesses grow and AMC provides us, hopefully, some breakout numbers on those, then we can add them in. For now, I'm not adding anything in for those, and I don't think that anybody should be adding in extra amounts for those line items. All right, I said we would wrap up this video talking about Goodwill and what, if any, impact that it would have on the income statement and the balance sheet. AMC, as of last quarter, has $2.4 billion of Goodwill on the balance sheet. And if you look back over the past 2 years here on this line item right here, there has not been any significant write-down in Goodwill. In fact, if we want to see when was the last time AMC had a significant Goodwill impairment, we'd have to scroll all the way back to the end of 2019, beginning of 2020. And that was right when COVID hit, that first quarter. There was no business whatsoever. The future of the company was in doubt. Future cash flows had most definitely been impacted, almost down to zero. And there was a $1.8 billion write-off of Goodwill in the first quarter of 2020. Now, I am just entertaining this because I want to be as thorough as possible. And some of you have asked me about this. When Goodwill is written down on the balance sheet, it does also impact the income statement. You can see here back in that first quarter of 2020, it was added as an expense to operating expenses, increasing total operating expenses on the income statement that first quarter of 2020 to over $2 billion. Now, that is a non-cash expense. It's not costing the company any money to write down Goodwill. But since it also appears not only on the balance sheet, but on the income statement as an expense, it would translate down into earnings per share and affect them in a more negative way. In fact, in that first quarter of 2020, you can see negative $208 per share because of that massive multi-billion-dollar Goodwill write-off. Now, is Goodwill going to be written off in Q4 of 2023 because the market cap of the company has fallen? Again, like I said, that would be a requirement to do a Goodwill impairment test. However, it is a very complex calculation, and there are some exceptions where even if the market cap falls, if the company is growing and the future cash flows look good, you don't necessarily have to take down a Goodwill impairment. So I guess we will all find out together in the beginning of March. My take on it right now is I do not expect a Goodwill impairment, but I think that it is useful at least for you to know that annually a Goodwill impairment test happens. It's a requirement by accounting rules. Whether or not we have one, I guess, guys, we'll just find out in a few weeks together. So where does that leave us for the final Q4 estimate? As you can see, if you watch this whole video, there are a lot of moving parts to try and make any semi-accurate guess for Q4. We don't know exactly what percentage of the box office AMC got. We don't know the exact share count when we're trying to calculate earnings per share. We don't know the exact deals of the distribution deal between AMC and Taylor Swift and Beyonce. And we have this wild card factor of the Goodwill. But I'm going to go with the share count being around 259 million. It might be lower, but I'm going to use that for this video. Maybe we'll get an update between now and March. I'm going to show you again, we have 3 different scenarios where AMC captures between 28 and 31.5% of the total domestic box office. That brings in total gross revenues between 993 million and 1.1 billion, giving them a net loss between negative 104 million and negative 67.8 million. Oh, I forgot to add in, I also don't know for sure if they're going to get any income from that gain on extinguishment of debt, another wild card. So a lot of moving parts here. And if the share count is around 259 million shares, that gives us a net loss per share between negative 40 cents and negative 26 cents. Unfortunately, I don't think there is any scenario in which AMC reports a positive earnings for Q4 because the box office was so low. And I think with Q1 2024 being a expected slow quarter, you can expect that there's going to be a loss in Q1 as well. I am Tony Denaro. Thank you for watching. Drop me any questions or comments that you have down below, and I will see ya on the next video.